Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me today to weigh in on market action is Tai Wong, independent proprietary trader. Tai, good morning. Great to have you here today.
Remy, good morning. Great to be here. Beautiful day, beautiful fall day here. And it's October 3rd. It's actually the first day of year 5785 on the Hebrew calendar. And when I think about that, it's like, Happy New Year to our viewers who celebrate. It's wow, almost 6,000 years. That is just a lot
amazing.
Of history. I have great respect for that. And it's even longer than the Chinese, which I think we're only about 4,800 years, of our calendar.
Yeah, that is significant when you think back to how many years we're actually talking about. So as we kick off today's session, though, we're keeping an eye on the latest economic data releases. And tomorrow morning, by the time you and I are on air, at 11 in the morning, we'll have that big U.S. jobs report. But we did see U.S. jobless claims come in this morning, slightly higher than forecast. And we also did get that ISM data point, which did come above expectations.
Yes. Yeah, so jobless claims were up slightly, like I think 5,000 from the week before. The continuing, the average claims over the past 4 weeks, which people like to look at because sometimes the week to week can be a little volatile, is pretty flat. Generally speaking, most people are pretty happy with jobless claims between 220,000 and 230,000. It's sort of the numbers that get north of 240, 245,000, which we've seen in recent months that give people a little nervous. But where the economy is right now, the market is pretty happy with it. The ISM report, which just came out at 10 o'clock, the services ISM, was really a little bit more of a surprise. I think that ISM services number came out at, business activity was quite high, almost 60 from previous 53. Prices were high, and the services PMI was the highest it's been in over a year at 54.9 versus a consensus of 51.7. So what this means, it sort of makes the job of the Federal Reserve maybe a little harder because they're trying to look at all the incoming data, and this isn't as important as the employment report tomorrow. Maybe not as important as JOLTS, but certainly they're thinking about prices paid sharply higher. Is this something in the pipeline? And we've been talking a lot about this port strike. So this is something that will maybe not immediately, but as it progresses, and I think it's got some time to go, become more in the public's mind as well as in terms of the policymakers.
And of course, as you mentioned, we'll be keeping an eye on how a lot of these events that are unfolding here in the U.S., especially along the coast of the U.S. on the east side as well as the Gulf Coast with this ongoing strike, how it affects jobs figures, the labor market, and if it does last beyond several weeks, the implications on inflation as well.
It's sort of like when you drop a pebble in the water and you sort of get the ripples. And we're really not quite sure, how the ripples are going to exactly flow out. Because dock workers not working, all the economy that supports around the docks, the people who make lunch, the people in the carts, they're getting hurt. So we just don't. Sometimes the farther out you go, there'll still be ripples. We just don't know where it's going to be.
Yeah, it's very akin to what we saw during the pandemic when people had to work from home, and even as people started working back in their offices here in New York City and across the U.S., we saw that all the businesses that relied on these white-collar workers coming into the office place, they were also affected as well. And even here on Wall Street, when you think about all the businesses that used to be down here for decades and now they're gone, we see how that affects small businesses and employment across the country.
It really, a lot of big changes in terms of what the pandemic did was I think it made people a little more casual. So the people who make dress shirts, Brooks Brothers flagship store is gone. The boot blacks who are in Grand Central, I mean there's one or two left, but if you look around the floor here, everybody wears sort of rubber soled shoes or sneakers, and it's easier if you're walking around. That wasn't true pre-pandemic or even 10 years ago. Everybody was in really nice dress shoes. The boot blacks were really busy. So when you I guess it's the law of unintended consequences. You do something, and what you worry about are sort of the unknown unknowns. If I do this, what's going to happen that I don't see? And sometimes it's sort of the opposite of what you expect or want to happen. So I don't know if they'll be true with this port strike, but certainly, things freight costs have already been moving higher, and this is going to be more, worsened by having to direct ships further to the West Coast or wherever it might be. Just as an example of all this trouble we've seen in the Mideast in recent years, on a monthly basis, ships that pass through the Egypt's Suez Canal is down about 2/3. It used to be 2,000 ships a month. Now it's 800 ships a month. In part, it's because the Houthis, who are controlling Yemen, have been attacking a lot of ships. And when you attack ships, there are European navies and the U.S. Navy is trying to keep things safe. But if the crews feel like they're at risk and the crews are in danger, and some maritime crews have lost their lives, not many, but still, once the lives of the crews are in danger, the shipping companies are like, we can't, we're going to have to route our way around the Horn of Africa, which is a much longer trip, which is why they built the Suez Canal. So, I think look for freight rates to continue to, move higher as this port strike progresses.
And when we think about the U.S. consumer as well, there are some concerns. You and I were looking through some of the local tabloids to see what the temperature was. And I think in this day and age of social media, there are a lot of people, the second they hit supermarkets and see empty shelves, perhaps it brings back memories of the beginning of the pandemic, and that is concerning to some. But realistically, when can we expect any changes in terms of consumer goods or perishables?
I think we'll see probably it happen in pieces. You mentioned yesterday you didn't find eggs at Wegmans, and I found eggs sometimes are a little spottier at Costco over time. They're usually there, but sometimes they're not. And I bet that there are memories of people who are probably like, I'm going to get some toilet paper just in case. Although I have to think that toilet paper is probably manufactured here. That's big and bulky and not very heavy. Do you really want to ship that on a container? I like to think not, but all it takes is, like you said, and sometimes the tabloids are great, but because, New York Post, a favorite of mine, I think they have the best headline writers in the business. But, it takes a few photos of that, and people look at it like, oh my, I've got to worry about this. And these anecdotes are, if anything, the ones that will probably get this strike over more quickly, because people are going to say, they're running out of toilet paper. We can't have that in front of an election. And we get to the tabloids. I think the head of the ILA, Harold Daggett, is getting a lot of unwelcome attention. Matter of fact, the New York Post flew a drone. I think it was the Post, but they certainly reported. I don't know if they did it, but they flew a drone over his house in New Jersey. And I have to say, I don't want to get into it, but he lives in an awfully nice place for the head of a union, and apparently he makes almost $1 million a year. So as stories like this sort of circulate, it makes maybe maybe you should take the 6-year 50% rate increase, and that's pretty good, and not hold out for 77%. So we'll see how it plays out, but it really is the tabloids and cases like this become important because they disseminate news, and if it bleeds, it leads. But in this case, the more eyeballs it catches, the more attention it gets.
Well, in terms of some of the headlines we're talking about in the New York Post here in New York City, I think they do indeed know how to draw in the attention of the viewer and make them want to click on some of those headlines. And I think, just the fact that you're talking about the size of this leader and how big his home is, he probably doesn't want that kind of attention or press getting out, especially while there's a strike ongoing.
Yeah, and it's bad for the rank and file, sort of, we don't have paychecks anymore, but you're kind of living well there, bub.
Absolutely.
So it was really, really interesting, and it's appearing in the Journal. So it really, I think his reputation, I don't think maybe he expected this much attention. But it's a big strike, and they're asking for a lot of money, so, sometimes you have to expect that the spotlight might not be as welcome as you think it might be.
Absolutely. And when you have media focus like that, we know that there's going to be a lot of unwanted attention, and we don't know what kind of attention it's going to be. So it'll be interesting to see what happens as the strike continues.
Sure.
And of course, ahead of tomorrow's jobs report, we're keeping an eye on the U.S. dollar. So in terms of today's trading session, there's been focus on the Japanese yen as well as the British pound. In New York morning trade, we are still seeing the British pound lower against the U.S. currency about 1%. And dollar yen is still slightly higher, right around the 146.70 level. So what do you make of the action we're seeing this morning in the FX markets, Tai?
So if we remember, it wasn't very long ago. Might have been, not even 2 weeks ago. We were talking dollar yen was traded on a 139 handle, and all of a sudden we're at 146, 147, and the strength in the dollars against the yen, or we could say the yen weakness, has actually really helped the dollar index, which is consolidating reasonably, not that far off the lows, but certainly off the lows. And for the new Prime Minister Ishiba came out and said, "I don't think we need a rate, rate hike this year. I don't think the economy is ready for it." Another board member came out and said the same thing, and I think that puts the Bank of Japan in sort of a delicate situation where they said, "Okay, we do have memories of this generation-long deflation. We don't want to repeat that." And fundamentally, the Japanese population is shrinking at sort of a relatively accelerating rate, so you are worried about getting back into a deflationary spiral. So it seems increasingly likely that the Bank of Japan is not going to hike again this year. I don't think we're certain about that. Probably not the end of October, and we'll have to look at December. But more people are coming back into the yen carry trade, saying, you know what, if the U.S. is only going to cut another 25 basis points in November, or maybe a total of 50, and the Japanese are not going to hike, there's a lot of extra 4.5-5% dig in here, and it's worthwhile. I don't think dollar yen is heading back towards highs, but I think it's definitely consolidating at a level comfortably above 140, and that's helping the dollar overall. And in part, something we haven't looked at in a few days, but precious metals, gold remains within 1% or 2% of the highs, but has sort of lost some of the energy that we had when it was charging the historic highs. I don't think it's going to dip very much, and it may even find buyers, bargain hunters, if we get towards the 2,600 or below, which is possible. We get a strong employment report, but that's still a buy on dips for gold and probably also for silver. And before we move away from what we're seeing in the other markets, since you mentioned the dollar-yen level and where we are right now, especially on the eve of the jobs report, I do want to take a step back and talk about the unwinding of the carry trade and what we saw on August 5th, because that came on the heels of the unexpected rise in the unemployment rate here in the U.S. So what do you think the risks are right now? So I think JP Morgan reported that they thought maybe 3/4 or more of that carry trade unwound in the days and weeks following August 5th. I think some of that has probably come back. And it doesn't look like we're going to get, from all the indications we've seen, the jobless claims, which were fairly low for the survey week that's responsible for the employment report that we're going to see tomorrow, and sort of the jolts and other sort of contributing factors, doesn't seem that we're going to get a number that's going to be very, very different from consensus. In fact, I think they're looking for last month it was 140,000. This month the consensus is around 142,000. I'm actually interested to see whether or not the revisions go flat. I don't think I don't get the feel that it's ready to. We're healthy enough to have revisions go higher, but if revisions are only slightly lower, or if they go flat, I think the thinking continues to change. So I think the yen carry trade, I don't think we're going to see something like August 5th again. Certainly it could easily move a yen, maybe even two, if there's a big surprise one way or the other. But I think it's in an area where it's relatively comfortable. Which brings to mind, actually, one chart I was looking at earlier today, and it's a little troublesome, is for Bitcoin. And Bitcoin's one of those where it really is sort of this S&P 500 on steroids a little bit, had been rallying aggressively, broke out of that long-term downtrend that I was, year-long downtrend that I was concerned about. But now it's, went from 66,000. We're just barely above, around 61,000 now, and it looks like it might slip back into that downward channel, which wouldn't, be good for too many of our crypto friends. So
Yes.
Tomorrow's data is going to be important for that. Is it going to continue to go sideways, or are we going back to, lower highs and lower lows? I'm a little concerned that we could be headed in that direction. So a false break.
And since you brought up Bitcoin and the risks following the U.S. jobs report that are coming out, I think for our viewers it might be very helpful to talk about why sometimes bad news is good news for the markets. How does that actually work?
So it seems strange to most folks, but right now good news is bad news because the Fed is undecided how much to cut. So when there's good news, stronger employment, a stronger economy, they're less likely to cut, which makes it bad news. It's good news for Main Street, but it's bad news for Wall Street. We're sitting right here on Wall Street. Bad news for Wall Street because we don't get the turbocharged fuel that we can get. That we can get bonds higher and stocks higher and Bitcoin higher. So we're very much in the area now where good economic news is bad news for the markets. That won't always be true. Once I think where the Fed is sort of stable, let's say the Fed says, all right, we're down to, in a year's time, we're down at, say 4% in the Fed funds rate, and we think we're at the right place, then good news becomes good news again, and bad news becomes bad news. But when policymakers are trying to decide what's happening and they're not at an equilibrium point, because nobody thinks that 5% Fed funds, is 4 3/4 to 5% is equilibrium. That's when news really matters, and you get messy things like. And in fact, my son, it's so funny you asked that. My son asked, it's like good news is bad news. You're exactly right. And for people who don't follow the markets, it might not necessarily be true. So I think this will be true for some time because the Fed is. I don't think the Fed will be done until probably the end of next year or get to a place where they want to be, wherever they think the neutral rate should be. I think they want to be at the neutral rate at the end of this and not below it. But as you say, it's a little strange for people who are on Main Street.
Yeah, I think it's very helpful to dissect that because we hear that often when there is good news, then it's bad for the market. And we know that the stock market is not the economy and it's not Main Street. But I think sometimes it's so helpful to break down what the meaning is behind some of this lingo that we often bring up in our conversation.
No, on your point about talking about stocks, one thing I looked at today was the Chinese have been on holiday since October 1st and won't come back till middle of next week. But I took a look. Let's take a look at graphic 2 if we can. I took a look at FXI, which is the ETF that follows the Chinese large cap stocks, and on the right is where we are as of close yesterday. You can see that that little red bar is the last day of the Chinese, when the Chinese markets were open. But these are ETFs, so Americans are buying these sight unseen without guidance from the Chinese market. As you can see that it was up yesterday sharply. Today it's sort of a little bit unchanged, but I would note that the Hang Seng, which has followed the Chinese market, is down 1.5% today, and it's the first substantial drop since the Chinese stimulus measures. So it'll be interesting to see, middle of next week, when the Chinese come back, if with a week to think about it, are they still as excited, or do they say, well, listen, we made some money on this, and it's time to take a little profit. I don't think it's going to drop sharply, but does it consolidate? Is there some profit taking in there? And just for a guide, the little chart on the left is the dramatic rise in the Chinese benchmark in the 5 sessions before their holiday. You can say that it's straight up and gaps in the middle, similar to the chart on the right. So I think the view here is we'll still get some more energy out of the Chinese when they come back, but I don't know how long it'll last. So something that we'll keep an eye on.
And Tai, since you mentioned overseas markets, I think it'll be a good time to do a market check for what we're seeing in
Sure.
the major U.S. equity averages. So right now we are seeing all the major equity averages in the red. The Dow Jones Industrial Average does remain in negative territory and is off by nearly 230 points or 0.5%. The Nasdaq Composite Index is also in negative territory this morning, off by 0.2%, and the S&P 500 is also lower in today's session, down by nearly 0.3%. Now, Tai, we've covered a lot of topics, but I do want to very quickly talk about artificial intelligence
Yes.
and OpenAI's latest raise and valuation. So not too shabby, huh?
Not at all. Not at all. Worth. They came $6.6 billion they raised, which puts the valuation at $157 billion. Pretty impressive, and some of the the usual names are in there. Thrive Capital led the raise. I think they put in over $1 billion. Microsoft, which has has put $13 billion in OpenAI, put another $750 million. SoftBank, Masabashi Son put in another $500 million. So this is still really, really popular. But in recent days, I've seen some articles saying, we're investing, and the market's investing tremendous amounts of money, billions and tens and maybe hundreds of billions of dollars into building out AI. How much is it really, really going to change?
Mm-hmm.
And there was an MIT Institute professor who came out with an article the other day saying, I think it's going to really replace 5% of the jobs completely. So there could be a lot of potential for some over-investment there. It's still early days, and Jensen Huang of NVIDIA is saying that the demand for their Blackwell chip, which is one of their big AI chips that can handle these, all these operations, has been, I think his words were, insane. So
Yeah.
I think it's going to go on for a while, but at some stage you do have to show what are some of the results. We put in so many billions of dollars. Where are the results? I don't think this is going to happen this year, but at some point, perhaps early next year, I'll say, well, what kind of returns are we getting for it, and how long do we continue to invest before we want to see something?
Mm-hmm.
In terms of just market sentiment, for Tesla is about to unveil, I think within the next few weeks, there are plans for a robo-taxi and automated driving.
Mm-hmm.
And if that's, kind of a knock your socks off or impresses the market, the idea that, I can sit in my car and, my car drive myself in the city and I don't have to worry about, all the traffic, and I'll just do my work, I think that will actually help AI a lot.
Mm-hmm.
Not, directly AI, but in terms of what's going to hit the tabloids, what's going to improve the mood, that could be very important.
Well, autonomous self-driving vehicles here in the U.S. are not as common as in some regions in Asia, and even when we're talking about the San Francisco Bay Area, that market is fairly limited. But what is your take on these types of vehicles? How long do you think you will need before this technology is up to your standards for you to feel comfortable?
So I'm a Gen Xer, so I'm a late adopter of most things. I like to see things work before I do it. So I got my LASIK surgery in 2007. That's about 20 years after it really started, because I wanted to see how everybody who got hit in the first round, if their eyes were still working a little bit later. And I'll tell you what, it's been the best thing. I mean, I've had perfect vision from 2007 until now. And I needed some reading glasses the last year or two, but that's age and not the surgery. I think I'll eventually get a hybrid car, but I'm going to see how it sort of the first, second generation works out. But I could see myself doing that, where it's an ICE engine, but it charges a battery and I get 60 miles to the gallon. So automated cars, I saw I think a Waymo one out in Arizona, and I didn't get a chance to get it when I tried. But I think once people get a feel for it and they're actually in it and it's safe, I think adoption could go up a very, very sharp curve.
Well, I think personally I feel the same way when it comes to these types of vehicles, especially given some of the stories that have made headlines and tabloids as well. So, Tai, thank you so much for joining me as always, and tomorrow morning we'll be talking about that jobs report.
Absolutely, great to be here.
Thank you so much, Tai. And coming up next, we have Steve Milinovic, who is a retired technology analyst and member of the Institutional Investor Analyst Hall of Fame. After the break, we'll be back, so don't go away.